Good morning, traders. Today is Monday, March the 20th, 2023. Let's take a look at our weekly trading preview and past week's performance results. Jumping right into it, it was an interesting week for us last week. A lot of price action, a lot of movement, some challenges that we had in our portfolio, but it ended up being a really solid week for us. And that was attributable, I think, to a couple of our unique approaches, diversified approaches and strategies that we use in our live trading room. We're not a one-trick pony. We're not just doing zero DTEs. And that really saved us this last week, where we had some sort of outsized gains in a couple of unique sort of setups that we like to look at. As we look at the market for this week coming forward here, the week of March 20th, we do like to pull out a little bit. We look at a weekly technical chart or matrix. We look at about 12 different indices, or excuse me, technical indicators mixed in there with some moving averages all the way from 5 days out to 200 days. And we are still on a weekly basis, on a bigger, longer term basis, in a strong sell mode. The trend is absolutely unequivocally down right now, but we are starting to see some buy signals come in, some green shoots come in. There are certain segments of the marketplace that are starting to grab hold here. And so again, this week, I think it's going to be all about the Fed. We do have FOMC coming out on Wednesday. And so we generally build most of our week around that type of an announcement. If we look at some of the key support resistance areas, you know, honestly, for me, there's not a lot to pull out of this chart. We talk about this a lot in the trading room. There's two types of markets. There's consolidating and expanding markets. And honestly, if you go way back here to July, you can see July of last year, you can see that we've really sort of just been in this contained area here. Not really consolidating or trading sideways because the range is so large, but we're very much contained in terms of the price action and the movement. And so just a couple of the big key areas that I always refer to. This black line, I've drawn that in there. I call that the cliff. That's about 38.40, and that has been a pretty substantive support level. Again, going back to the summer of last year, we've got the VWAP and we've got the point of control being right in here. Those are where we're sort of pinched or sandwiched between right now. And so again, we'll just have to see, I think, what the Fed does this coming Wednesday. I think it may finally be time to get a catalyst there to either push us down below this 38.40 cliff or up above this high that we got around the first part of March. So a lot of movement, but not really any directional bias that we're getting right now in the marketplace. Now, if we look at the 2-hour chart, which is what we base our support resistance levels off going forward here, we look at pivot points, we look at Fibonacci's, and we just look at support resistance just in general. I'll give you some of my numbers that I am looking at here as we get started in trading today. So for me, on the downside, I'm looking at 39.32. Again, remember, we are on a new futures contract right now. The March did expire. 39.32, 39.20, 3900. That's a big one right there. 3900 is a big one. And then 38.81 down below that. So that would be my levels for the bears if you're looking at downside. If you're looking at the upside part of the marketplace, I'm looking at 39.60. I'm looking at 39.79, 39.90, and then somewhere around the 4,003 to 4,008 level, and that one it would be a big one as well. So those are the main levels that we're looking at today. Again, I think what we generally get as we go into an FOMC week is probably what we're going to get this week, which is Monday and Tuesday, and even maybe into the morning on Wednesday. We just get a lot of chop waiting for that potential directional bias to come in. If we look at all of the major indices, the Qs, the SPYs, the IWMs, the diamonds, first of all, we trade all of these individually with distinct and disparate strategies. But I think the thing that is the most interesting to me, the Qs are holding quite nicely up here above their 200-day moving average. SPYs are clinging to the 200-day moving average. The IWM has just gotten walloped down here. Regional banks, they're about 16%, and we know what's happening in the banking sector right now. They're about 16% of the IWM, of the Russell, and in addition to that, they're very interest rate sensitive items. So really gotten beat up there. DIA down below the 200-day moving average, but the darn thing's been pretty darn stable. We have sort of drained off our ladder trades on our DIA. Generally, we have 3 ladder trades going simultaneously. We've let the last 2 just fully expire. With max profits, we're down to 1 ladder on this. So we've got a tremendous amount of flexibility in putting this trade on. We've got a tremendous amount here in our SPY for this week because we're starting fresh there. We're continuing to work the IWM this week. I'm really excited about this. This is a trade that, again, generally we are shooting for 1% a week. And we've got a potential 9.5% capture. Again, the key word being potential here, because we have rolled the IWM a couple of times, and we're also currently in a open position on the Qs, which we have rolled as well. So there's a lot of potential for us this week with these particular strategies as we go forward. We look at the year-to-date performance, and boy, the start that we had is gone now. The DIA's back into negative territory. IWM back into negative territory. The S&P is up by 2.4%, but that is, really it was shooting almost for 10% there just a month and a half or so ago. The only thing that is really performing quite well are the Qs. They're still holding up quite nicely. So as the SPY has come down, so has our ATM investing asset allocation model, but we're still beating the market, which is basically our mandate. We'll look at that here in a little bit. We look at some of the price action that we got in this past week. And it's probably no surprise. Tech really did rebound. That's sort of reflected. There we go. Tech rebounded. Good grief. Tech rebounded quite well. Okay, never mind. There we go. Tech rebounded quite well. And that was reflected, obviously, in the Qs and the nice, solid week that they had last week. And then probably no surprise that the financials and real estate is sort of tied in with the financials. The financials had a bad week, and energy continues to sell off. We have an oil ladder that we've been working this past couple of weeks. Looks like we're going to need to continue to work it as energy keeps dipping lower. We looked 2 weeks ago, and the overall scheme of the marketplace, pretty much nothing but down. Last week, a little bit more of a mixed bag here on the heat map. You can see that there was some green shoots, and again, largely in that technology sector is where we've been seeing that. Again, a little bit of a mixed bag last week. 2 weeks ago, it was just down, down, down for everything. That's a pretty big hit right there. 2 weeks ago, down 8% in a week. We talk about black swans all the time. I don't talk about black swans, but a lot of people talk about black swans. That's a 1 in 2,000 trading event occurrence. I could care less about black swans. I don't think it's even worth talking about or worrying about. But 5, 10, 15, even 20% drawdowns, my goodness, those can and those do happen all the time. And, you know, we were witness to that last week. 8% drawdown, pretty darn heavy. But we're getting a little bit more of a mixed bag here this past week. So this is 2 weeks ago. Again, this was last week. Starting to see a little bit of green shoots showing up here and there. We'll have to see again what the Wednesday FOMC catalyst does to the marketplace. We look at the put-call ratio. Again, the put-call ratio is above 1 when put volume is greater than call volume. It's below 1 when call volume exceeds put volume. So this is a way to gauge market sentiment. Sentiment is deemed bearish when the put-call ratio is trading at high levels, and it's bullish when it's trading at low levels. So we look at the indicators, and they're still in the bearish mode, but not by much. Not by much. I wouldn't say that we're seeing a lot of the fear that we see in the fear index, generally speaking. There's a little bit of a sort of split personality going on there. Now, we look at the open interest areas. These are the open interest, or gamma walls, as some people call them. But that's where the price action is. That's where all of the action in the market is taking place. This right now, we finished at just above 3,900 on the S&P. And you can see again that 4,000 level, that's a huge, huge level, as well as this 3,945. We have done a lot of trading around this 3,945 level, and it has been a pretty good level to work off of. 3,900 also is a key level. Those are the three main areas that I'm looking at, is about 3,945 in the center, 3,900 on the bottom, 4,005 on the top. This one, of course, being the key wall right here. Expected move for this week? Well, we had a big expected move last week of 115. We were very grateful for that because we needed it. And the premiums last week were rich. And of course, with FOMC coming out this week on Wednesday, you would imagine, rightfully so, that we're going to have a little bit higher expected move, even more so than what we had last week. So we should not have a problem this week in finding strikes, in finding the right adequate premium to get us the results that we desire, or that are the goals that we work for on each week. We do look at the fear greed index, and we're still in that extreme fear area, but we're not really seeing it with a lot of the other indicators. And so, you know, again, this is a contrarian indicator. When, you know, everybody's greedy, you want to be fearful. When everybody's fearful, you want to be greedy. I do think that we are seeing some green shoots here in the marketplace, and I think that we're going to be able to take advantage of some of these sort of rich premiums that we're going to be hopefully getting this week as we trade. We go beyond that, and we look at the key news items for the week. EBC's Lagarde is speaking today, this morning. We have the CPI out of Canada tomorrow on Tuesday. Of course, Wednesday is going to be the key day for us. We've got CPI out of the UK. We've got PPI numbers. We've got oil inventory numbers, and we've got the FOMC. And that's going to be the big one for us this week, is FOMC. Thursday is jobless claims, housing starts, nat gas. We are looking to finally put our nat gas trade back on here this week. It could be as early as tomorrow. So a lot of stuff happening here. We'll just have to see how that pans out after the FOMC announcement. We look at our updated performance results from this past week. Again, it was a struggle on a lot of these days, but it ended up being an awesome week for us. And it's largely, I think, attributable to maybe some different or unique strategies that we use here in our trading room that others don't. So, of course, we do a zero DTE strategy every single day. And one of the big pluses of the last few weeks with zero DTE has been that we've been able to double dip. That is not just sort of set in stone. We're going to do 2 of these every single day. But when the opportunity presents itself, we do. And obviously, these trades are generally done with the same capital. Not always, but generally, you know, we're going to put 10,000 up or whatever it is into our first zero DTE. If we can book a profit on that, Then we go and look to get a second iteration up and running, obviously with the same capital. And so it does effectively double our potential profits on the day. If we can make 10% in a day on a 0DTE, we knock 2 of them out. Well, that's 20% a day. So it has been a very, very effective week for us this past week. We've had 54 days of 0DTE opportunities. We've done 78 total 0DTE trades, with 76 of them being winners, 2 of them being losers. That 98% win rate, that's about as good as you're going to get. And this, I would say this too, this win rate here, this comes with real money. Not money that you would make in some of these 0DTE setups with butterflies where there's no real actual dollar profit amount. They're like, oh, this trade is going to make you 400% return, 4 times your money. Yeah, you're 4 timesing $100. It's almost not even worth bothering with. This comes with real money. And if you are in a trading system, I would say, that doesn't honestly give you a shot at making $1,000 a day, you probably need to look to upgrade. There's no guarantees, there's no promises in the marketplace, but you should be able to realistically see that as a viable opportunity. And it's up to you and I as traders to figure out if we can knock it down. So our 0DTE has just been fantastic. And I will say, with regards to our 0DTE, it has been the NDX that we've been double dipping on at the end of the day. The NDX is a tough one to trade. Wider spreads, more erratic movements, hard to get in and out and get good fills, but my goodness, it has just been raining cash for us this year. So anyway, if it keeps working, it keeps working. But it's been really, really good for us so far. We go to our 4DTEs, and again, it's been fantastic for our 4-day to expiration trades, but not without work. We've had to roll both our SPY and our Q this past week, and we're still in the Q roll right now. We're still in that. So that expires, I think, 3 or 4 days from now. So it's been wonderful. It's been above average on our performance in terms of ROI. We generally try to shoot for about 10% a week. Well, we've been in the 12 to 16% profit range. But again, it's because we've had to work the trades. We've had to roll those trades. So again, a lot of work going into the 4DTs, but it's been paying off for us so far. The IWM Millionaire Maker trade. I love this trade. I am so excited about how we have adjusted our approach to this trade this year. We are trading it more dynamically rather than the static approach that we traded it with last year. And I believe that we came in very, very close to a 50% return last year, about 46% ROI on the year last year. I feel like we have the ability to bring in 20 to 30% higher returns this year than we did last year. So I'm really, really excited to see how this rolls out. And in fact, as we trade it more dynamically, we've said this in the trading room that we are going to have rolls that we're going to be working with. We're in one right now, and it has almost 9.5% potential return built into that roll. Again, this is a trade that normally makes us 1% a week. So it could be a juicy, juicy setup for us. I will probably do an updated training video on this, where we're at year to date, how powerful it has been for us to trade dynamically once we get through this roll and get a win or a loss booked on that. Been great for us. Pairs trades, we've done 11 so far. 9 have been winners. We've still got a couple of them out there working. So we'll continue to work those this week. Those are on the agenda for this week. No new bear market trades to look at for this past week, but we are still working, of course, our model short portfolio. The stock millionaire maker, that we're using PayPal and we're using Netflix here, rolled both of those once again last week. We're rolled out a little bit further than I would like on the Netflix trade, but both of them look really, really solid. And where we were looking for a 1% a week goal here with the IWM Millionaire Maker. And now trading dynamically, we're looking at 1.2% to maybe 1.3%, 20 to 30 points or basis points higher. On the Stock Millionaire Maker, we're looking at somewhere between 2 and 6% a week. So this has just been fabulous for us. And again, no losers so far, knock on wood, year to date. Our positive Vega DIA trade, we generally put on a new ladder every other week with the DIA trade, and we like to maintain 3 ladders open simultaneously. We've let the last 2 ladders expire fully profitable for us, and so we're just down to 1 ladder here right now, and this again has been an absolute awesome trade for us. No losers, 10 winners out of 10 trades, and we're banking about 9% a month, or at least that's what we have been banking year to date on that. So just again, fantastic. Scalping was phenomenal last week. Tuesday, we just absolutely knocked it out of the park. It was Tuesday was one of those days where we were just on the right side of almost every scalp. And again, $2,700 is way beyond our goals or expectations with our scalping program. In scalping, we're looking to make about $500 to $1,000 a day. Thursday was another just absolute gangbuster day. Very close to that max profit of $1,000. So scalping again has been fantastic for us. If you are a member of our live trading room and our investment room, you get scalping. You get our scalping program basically for free. It's $3.48 a month. That's the lowest we could charge to manage the accounts. But scalping's been fantastic. Love to see you guys come scalp with us. It's been fantastic. Dragonflies, we've been working BA. It has been a tough taskmaster. Boeing has been a little bit erratic. This is a stock that's been moving quite a bit, but we were able to book a profit on it once again last Thursday. 1 day left to expiration. Booked a nice 10% return profit on it. That trade has been phenomenal for us this year. Up almost 34% rate of return on our Dragonflies this year so far. Theta Fairy, Theta Fairy is probably our favorite trade in the trading room, or at least the trade that the traders seem to talk about the most and love the most. And who wouldn't love to just have a systematic approach in their trading system that allows them to wake up every morning to $100 under their pillow? It's been an absolutely awesome trade for us. 52 total trades this year. 51 have been winners. 1 took the $300 stop loss. And today, again, as we get started on this trading week, Monday, March the 20th, we started our Theta Fairy. We start all of our weeks with our Theta Fairy on Sunday evening. We don't trade Friday, but we do trade Sunday. That hit a profit last night in about 40 minutes. Max profit. In fact, we pushed it a little bit, actually to $125 profit rather than 100. So we double dipped last night, and we still have one of those that is working. But just an absolutely fat. Who doesn't want to add an extra $20,000 a year per contract to your yearly income? That's what the Theta Fairy has been doing for us. Our gold ladder has been fine, but we haven't been able to really get any of these ladders to expiration like we've done with the DIAs. The reason that we've maximized our profit on the DIAs, 9% a month is about the max that the DIA trade can yield us, and that's what we've gotten. The reason we got it was because we were allowing those to go all the way to expiration. We've not had the luxury of doing that with our gold ladder as of yet. We keep chasing the price of gold, but we do it at a credit, and we're bringing more and more money in as we go, and there's a lot of extrinsic value build up in that right now. So far so good, but it is tracking below our expected rates of return of 1.5% a week, about 6% a month, about 70% a year. We're below that. Our overnight vampire trade came back strong with that. We did get a winner on it. So now we're 2 winners, 1 loser. It was about $3,200 profit in the model portfolio. And then it was about $15,000 profit for me in my bigger account. So, you know, when you can drop 18 grand into your wallet overnight, it's a good trade. It's a good day. And again, these types of trades, the Stock Millionaire Maker, the IWM, our results on the Zero DTE, our Theta Fairy scalping. We're doing the overnight vampire. We're doing a lot of things that a lot of people just don't do. These are trades that you know, I know we're on the right track when veteran traders say, now what is it and how do you do that? And I've never heard of that before. I'm like, okay, then we're doing the right things. Our oil ladder trade, somewhat similar to the gold trade. We got to chase it a little bit. As you can imagine, I am just thrilled with our results. Absolutely thrilled with our results. If you want to come participate in our live trading room, we do about 30 trades a week with about 15 different strategies, as you've seen there. Some very unique setups. Come hang out with us for a week and check it out. I believe you'll think that, as we think, it's one of the best value trade systems out there. This idea of combining a bunch of our heads together on the same trades and collaborating. It's an awesome, awesome opportunity to come chat with us and ask questions. You can do that by going to tryzerodteforfree.com. We believe in it so much. I believe in it so much that I have a double your money back guarantee. If you go through the 4 hours of training that we set you up with, if you meet with me one-on-one in a live Zoom consultation, and you participate in the trading room, and at the end of all of that, you don't think it's the most amazing trading room out there, I'll give you double your money back on your subscription. So there is basically no risk. Come out, hang with us for a week for free. If you like it, sign up for just a month. Don't do the yearly yet, even though there is a benefit price-wise to doing that. And invoke the guarantee. Let us put our money where our mouth is. If you want to try to focus more on investing, something that's passive, something that only takes 5 minutes a day, something that over the last 3 years consecutively has been and is currently beating the stock market's overall return measured by the S&P 500, you can go to tryastforfree.com. If you have investing dollars, this is the place to check out. If you have trading dollars, this is the place to check out. So tryastforfree.com. Absolutely been just crushing the market over the last 3 years. If you want to come scalp with us on Tuesdays and Thursdays, and why wouldn't you? Who doesn't want to try their hand at making $500 to $1,000 a day? Again, no guarantees, but that's what we've been knocking down, and that's what the potential is. We usually trade one E-mini contract that's worth 50 bucks a point. So you're talking about trying to grab somewhere between 10 and 20 points on the day. That's our goal each day. Sometimes we do a little better, sometimes we do a little worse, but that potential is there. And I will tell you, we got FOMC coming up. So this is going to be potentially a really, really big week for scalping. I've got a lot of expectations for our scalping room this week. So that's the areas that you can come and participate with us. As always, I appreciate all of you guys. Grateful for you. I do believe in what Zig Ziglar says, that you can get everything in life that you want if you just help enough other people get what they want. And so I'm appreciative of all of you that are on board with our trading program. Appreciate all of you guys that are not in our program but participate, are interactive, ask comments, have comments and questions in the YouTube channel. I hope all of you guys have a great trading week this week. And again, as always, let me know if you have any questions, or maybe more importantly, what you guys are looking at, what you guys are trading this week. So take care. We'll see you guys in the trading room shortly.